In the private market where you are, what does it look like?
Look, the momentum continues. And in some ways, I hearken back to my old days on the trading floor in the 90s. And I feel like some of the same strategies we got used to in the public markets are being applied to the private markets in terms of momentum, in terms of how portfolios are being built, and in terms of the kind of boom, boom movement of being in anything and everything. So it's a fascinating time, but it's also a time where investors want to see us act with a bit of decision making and a bit of caution. And I think that's very important for the year ahead.
What does the year ahead look like to you?
Look, I think the year ahead continues to steamroll when you talk about tech. There is so much development coming, and the areas in which we work are kind of the non-sexy, boring areas. The areas where old industrial companies digitize, where industries and areas like healthcare that have been innovating so much and forced to innovate by the pandemic are now adapting those innovations and realizing they can go even further to drive efficiencies. And so what's interesting to me about the sectors we work in, enterprise, healthcare, thinking about what's going on in fintech, some of these industries need to modernize regardless of where the economy goes. And so there's so much concern about inflation, obviously coming from the public markets and coming from a huge platform. I think about that a lot. But these innovations will save companies money, so I think they continue regardless of the economy.
So Sheila, just let's dig into that a little bit more. I'm wondering if inflation does stay elevated and the Fed doesn't really succeed in bringing that materially down next year, does that dent momentum even in the short term?
Look, I think if inflation is not brought under some kind of control, that certainly will concern people and could dent momentum. That said, I think what's driving inflation continues to be the debate among investors. Is it a temporal situation or is it a long-term ongoing issue? We continue to have supply issues. There continue to be labor shortages. There continue to be startup issues within the economy globally, not just in the US. And that's expected. When you go to the airport and there's a huge snowstorm, it takes a while to start things up and have it be efficient again. And that's exactly what the pandemic has done on a grand scale to global supply chains and to the global economy more broadly.
Why would you want to invest in private next year? Let's assume that volatility goes up in public markets. Does the lack of mark-to-market in private markets provide you with a better option next year as volatility starts to pick up elsewhere? Or do you think you're going to see similar volatility in some private markets as you're seeing in public markets?
Look, I think you'll actually see some volatility in private markets as well, and you already have. I think coming to the private markets and expecting that it's just about the mark-to-market is limiting in your thinking. When you think about the private markets, they've expanded so much. It feels like the public markets in some way in terms of the breadth of the sectors, the number of companies, the amount of things going on. And that's the trend we've seen, when over the past 15 years, the S&P 500 has had a huge turnover in who's captured in that index. And so much of what's going on in the economy is captured in the private markets. But you see volatility depending on the sector. I would expect volatility in the consumer areas of venture and of growth of the private markets, the same way you would in the public markets, because it's hard to predict where consumers go. And we have a lot of uncertainty around the pandemic and other issues driven by it.
Sheila, I think that when we talk to any investor, we talk about the 60-40 portfolio. Everyone always says for the 40 portfolio, you need to find different kind of assets. You need alternative assets. And I wonder, what role do you think venture capital is going to play in that in the future? Like, what are you noticing in terms of the type of investors and the type of money flow?
Look, I think, venture and growth are both areas that have become more mature. And as a more mature area, you see experienced investors, you see large institutions, sovereign wealth funds, U.S. pensions, the super funds from Australia, et cetera, engaging in this space. They force a discipline, they force a mark-to-market, they force, I think, some great things within this area of investing and within alternatives more broadly, because that that discipline and that mark to market and that questioning of strategy will be what's needed to keep maturing this space. And I think it has matured incredibly over the last few years. And you see that in the deals being done, you see that in the sectors being explored, and you see that in the companies being brought to market that are sustainable. We love to talk about the ones that are a bit nuts or go a bit crazy, but there are hundreds of companies that are doing great work that are being brought to market by venture.
In terms of what are the big long-term trends you see that investors can kind of latch onto right now, we hear more about Meta. That's going to be clearly a theme into next year. Sustainable energy, clearly a huge theme going forward. Which of these trends do you think are going to outperform? Where do I want to kind of hitch my money to in terms of making sure that I'm along for the ride?
Well, I'd say a couple of areas we're spending quite a bit of time on, and we just spent some great time with our strategic partner BCG exploring some areas where we think people need to focus and where we think there's opportunity. I think climate tech and overall climate change is a big one. And in our conversations and debates about investing in the year ahead, this is an area where we see a huge amount of opportunity, a lot of capital already flowing, however, and so the need to really understand what the technologies are and where innovation's being driven. These are areas where actually Europe and even Asia are somewhat ahead of the US in terms of innovating, and we have to be global in our footprint, which of course BCG and B Capital are. I think a second thing that we need to think about is that digitization of old industry. BCG does a survey every year, and this year 35% of the companies they surveyed are happy with their digitization. That leaves a big swath of companies that have not been getting themselves brought into the new age and applying technology effectively. And that's gone up only marginally from last year. It was 30% last year. So a huge number of industries need to be brought into the 21st century and beyond. And I think that's an investing area that will stay very sticky and offer a lot of opportunity.